You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it is time to rock out once again with the option block. Everyone's favorite. I hope it's your favorite. It's certainly one of mine. I have many favorites on this network. I can't choose one. Bi-weekly source for all things options related. We're here for you. You guys have questions. You're concerned. You're wringing your hands together. You're stuck at home. You want to learn what's going on about these markets. We're here. We got a podcast for you. Or maybe two. Or a dozen. Or more. You guys are discovering new programs in droves. You got new listeners discovering us all the time. We love it. If you enjoy what you're hearing, put a review, put a listen, share it out there with your friends. Spread the good word, as we like to say. It's important to have stable, reliable sources of information in times like these. So if you like what you hear, leave a review on your platform of choice. Make sure you can continue all these new folks out there who are scrambling to figure out what the hell's going on in this world. Have them discover our stuff. At the very least, we'll keep them occupied, probably educate them, inform them, all of the above. And, of course, keep those questions, those comments coming in. We do love to hear from you guys, and you guys have a lot on your brains. We're going to get to that in a little bit. And joining me on the old program today to collectively help you walk back from that precipice, walk back from that ledge. Starting off, let's go out to the land of Maine. We missed him for the last few shows, but now he's back. Once again, it is the Rock Lobster, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Lion Capital. You know, Mr. Rock Lobster, it's ironic. Since the last time you and I have chatted even, we are now all pretty much self-isolating, so we're all stuck at home in our own compounds, and we're all also homeschooling our kids. So effectively what I'm saying is we have all become Rock Lobsters, sir. What do you say to that?
Well, I like to say that I predicted it would happen, but of course, anybody says that they predicted this would happen, I would have to say, what kind of bridge are you trying to sell or something like that. But yes, the world has effectively become I have cloned 300 million rock lobsters. I'm not quite sure as flattering as it sounds. I really didn't want it to happen this way. Let's put it that way.
You were self-isolated before it was cool, before the cool kids were doing it.
Before it was necessary.
Yes, before. Real quick question. Are the clam pirates, has this stopped them, or are they still at your door stealing and thieving away?
5:30 every morning when the tide is down. Wow. They have stopped. Are you kidding? There is no coronavirus among the clams. They're out in the free air, just the guys in their boat. They're having a grand old time, and they're keeping the main economy going. You go into the corner store, and there's clams and there's lobsters and all kinds of stuff. So those guys are still out there doing their thing.
There is no holiday. There is no self-isolation for clam pirates. What's that old saying? No honor among thieves. No holidays the Clam Pirates. All right, and also joining us, he's happy, he's tranquil, because, they got the weather shield out there that also stops all viruses from coming in the mecca known as St. Charles, where we are joined once again by Uncle Mike TOSAW from St. Charles Wealth Advisors. Uncle Mike, welcome back to the program, to you as well, sir.
Always happy to be here. Got some exciting things that are happening in the marketplace, and no clam pirates to discuss. I'm just isolating at home today. I'm overlooking the Fox River, so no clam pirates on the Fox River. I'm happy to report.
Are you enjoying being a rock lobster as well, self-isolating and also homeschooling your children?
It's a little different, gotta say that. It's been a few years since I've been in this position to where I'm at home all the time, but thankfully, we have a lot to be thankful for, because this could have been a lot worse.
Indeed. Glass half full. I like it. As we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block. This is indeed the portion of the program where we break down what the heck is trading, what the heck is going on, and I think we can finally put the lie to the old adage that, I have your portfolio with a little bit of gold or a little bit of fixed income, so I've hedged you, I've diversified you away from risk. In markets like these, particularly as we saw again yesterday, when it all hits the fan, correlation goes to 1. People are selling everything. They were selling fixed income, gold getting annihilated. These are not hedges. So if that's what you're looking to in this environment, to hedge your portfolio or indeed your clients' and customers' portfolios, you are doing them a disservice. This is not the way. These are the markets where you need to hedge the most, and that is when they pretty much all fall apart. Unless you have some sort of directional hedge, like a put in place, or you have volatility component to your portfolio, you don't really have a reliable hedge. So something to keep in mind there. As everyone's writing in, I can hedge with this or that, or people have been for years. The old modern portfolio theory falling apart as it all heads to 1. We're all heading a little bit to the upside, was pretty firmly to the upside. Now, perhaps a little bit less. Now, most of the major indices still in the green, though, so that's a little bit of a break. We're not in the sell everything mode that we were in pretty much for the last few sessions. That panic selling seems to have abated somewhat, which is nice, even though we already have cut some names pretty much to the bone. Names like Ford are approaching down around $4 again. I mean, they're approaching that 2008 crisis level when they got down to about $1. So they're not quite there yet, but they're not that far away either. We're seeing, like I said, commodities getting annihilated. If you like that, crude, gold, all that kind of talk, we're going to get to all that in a little bit with Mr. Rhodes and others, Sean from Russell and others, and Twifo in a little over an hour, about an hour and a half. So stay tuned for that if you're listening live, or hit the next, I should say, on your podcast player of choice if you're listening to this after the fact, like I know many of you are. We're seeing a lot of stalwart names like our neighbors across the street here, BOEING, threatening bankruptcy as a result of these coronavirus fears, saying they need to get bailed out. News coming across the wire just as we started the show, breaking actually, that Trump saying, which is something people had issue with last time, we bailed out all these companies, and the country, the U.S., got no real return for that. They got no stake in that. Trump saying, no, not this time. If we're going to give you aid as a bailout for the coronavirus, we may want some equity in return for that, which is kind of interesting. Maybe a little bit more modern, business-like take on the government just doling out handouts left and right. So if you are somewhat opposed to bailouts across the stake, maybe a little bit of an equity stake, and let's say a BOEING might be an interesting salve to those wounds. Either way, interesting stuff out here. Also interesting, and maybe a little bit alarming, who knows, is that yesterday we saw news coming out of NYSE that they were shuttering pretty much the last options and indeed equity trading floors out there. So the PCOAST, which was still rolling along, as well as the AMEX floor, all shuttering down. The Philly obviously closed already. So that pretty much puts us effectively in, there's some question lingering out there about the box trading floor, but even if they were open, I don't think they're doing a lot of papers. So we are effectively in the 100% electronic options market that I know when I first walked on the floor of the CBOE in 1997, that the grim, dire lot of market makers that they all are were worried about and gnashing their teeth about back then. They saw the ISC looming on the horizon back then. They said, "Here come the machines to replace us all." It didn't. It took a little longer than they thought. And it wasn't just the ISC that put the nail in the coffin. It was many things, of course, decimalization, penny pricing, payment for order flow. All these things helped to squeeze out market makers along the way. But this, at least for now, no more people anywhere in the U.S. standing on the floor making a market in any options, which is interesting and also surprising that we've been able to put up the paper that we have, given the fact that, like I said, these products, even historic pit-traded products like the SPX or on the futures option side like Eurodollars, completely electronic now and still doing decent paper, which is surprising, and maybe putting a little bit of a nail in the coffin about whether we need market makers now. I know a lot of you have opinions on that. We'll get to that a little bit later in the show. Of course, we had the Flow Master on the show with us last time. He was talking even back then. That same day, that was a historic day. We saw VIX closing at an all-time high of 82.69 that day. That was off the high it set previously back in the 2008 financial crisis in November of 80.86. Just as a frame of reference, this is what Henry pointed out as well, that on that same day, the S was at 752. So we're at a similar level in the VIX, and the S is at about a 2,400 level right now. So little bit different beast when you're that much farther up the skew curve and vol is that high. Almost a completely different beast, which makes it interesting in and of itself. As I come into showtime, we saw VIX at about a 76.5 or so. I put it almost exactly unched from last show, which is kind of weird, but of course, if you wait 5 minutes, that will change, and we're at about a 75 and change now, so that puts it off about a point from last show. VVIX at 177, so still frothy, still elevated, but down 5 from our last show. And VXX, just hard to even say this with a straight fix, VXX is at 70, up 24 handles from our last show. That shows you how frothy and turbulent that front portion of that VIX futures curve is out there. I could keep going, but let's get the rest of the crazies on out here. Mr. Rock Lobster, it's been a while since you've joined us, so let's start with you. Plus, we all are being mini rock lobsters right now, so a lot to unpack. What in this maelstrom of madness, sir, is catching your eye?
Well, first, if you're enjoying your time as being quarantined with your children, and living the life of the rock lobster, feel free to let me know on my Twitter handle at OptionVol, and any funny stories you have.
Oh, they will. They are not shy of expressing their opinions to you, sir.
I know. I've been getting them. So there's a couple things. So I think that are interesting. One is, and this is something Mark was talking about. I gave a little webinar to it at Option Pit. The assets under management now of TVIX are enormous. Remember, TVIX was just a $20 product a month ago, and it's now an $800 product. So they are hungrily gobbling up all the VIX futures with UVXY. Now the assets under management are so big. It's almost like the opposite of the XIV, where they had to short everything into the close. These guys are buying it into the close. If we get some kind of surprise, like, and there's some Coloquin or whatever, how you pronounce it, it's possible that it could be a good therapy, but that certainly would start to put the nail in the coffin of like the ever expanding volatility. And one thing I tell my students is, vol is going to rise until there's a reason for it to stop. And, my biggest, I'm sure everybody's armchair quarterbacking the administration. I think that's everybody's favorite pastime. But, if you just say we could be in this till July, I don't think that's a very good answer. People don't want to hear that, They want to say, okay, we do the self-quarantine thing for 2 weeks, see how well it works, and see where we are. The CDC has to look like they're doing something. The fact that people can't get tested easily at this point is pretty annoying. So I think those are mental roadblocks, or at least for the market, like, wow, this is never going to end. And then the Fed's like, bam, 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 we're just going to throw a bunch of money at the wall and see what sticks. And I think really what people wanted is like a little more clarity on, explaining what policies work. So I think the messaging has been a little, let's just say, up and down. So I think that's the reason the market just kept selling off. It's like, this is not going to end. Nobody knows. We're just going to shut down our global economy for who knows how long, and then we'll come back and see what's left. I don't think that, you look at the mortality rates of this, like, that was a pretty tough nut for the market to swallow, at least the equity markets, right? So, maybe there's a little bit now, maybe possibly that, okay, we're a week into this, things are still working. It's not great. There's definitely some industries that are getting hurt badly. But is there a way out? So I think if the market sees there's a way out, so the vol will subside. But that being said, here we are, and I'm not going to call this a vol sell-off. I mean, I think we had another all-time high close, or not close, but price this morning. Things looked a little bad. So can all this get better? Yes, I hope it does. Is the government now, there's less bureaucratic logjam? It appears so, but not enough to get everybody what I would call, bullish. And until that changes, vol's still going to be there. Now, because those other products like TVIX and UVXY and VXX own all this stuff, right? If there's any clarity on an end to this virus, just moving from the vol from 75 to 50 is pretty freaking big. And I just tweeted out a couple of things like the product prices for those, TVIX can go to 330 if VIX goes back to 55. That's down $500. UVXY to 61. That's down $49. VXX down to 48. That's down $20. So, the moves on these products right now could be, and to be honest, nobody's going to give a damn about the vol products, okay? If they see the credit markets kind of getting a bid again and some sort of normalcy, everybody is fine with letting those vol products go to zero. But just for investors, you got to be very careful on what happens. I think TVIX even has a clause in it. If it's down more than 20%, they have like a shutdown thing. It's definitely a weird product. I'm not recommending any of these products. I'm just saying these are things that could be making big moves. They could be making big moves at the end of the day to push VIX futures up. That creates kind of a more elevated vol scenario than actually is. And I think that was partly yesterday and the day before. So again, I don't know when all this ends. I figure when, I guess that after people have been in this lockdown for a week, they're like, okay, I'm going to go to the store. There's still stuff. They're not freaking out anymore, getting used to it, doing the self-quarantine thing. People now have it and they seem to be still talking. Okay, so, I think time will fix it. I don't know. I think even Trump said, we'll just wake up one day and it'll be gone. Probably the timing was pretty poor. Better to say that when it's over and instead of when we're starting it. But and I think that's what we have right now. So to me, there's interesting trades. Again, I don't recommend trades, but I do have things on, and basically everything I have on is assuming the market's going to move. It's going to move. I'm not thinking 10 points. I'm thinking like 20, 25 points SPY. And unfortunately, either way, stuff like that. So there's a lot of opportunity, and I think if you're buying stocks, it's, you keep thinking, the market's up a little bit, I'm not going to buy anything today. But, if you're a long-term investor, some things are at pretty low levels, far, far below where they were last year. And at the beginning of the Trump presidency. So with the one exception is oil, I got no idea, and I'm not adding any more oil stocks. Although USO down here, I don't know, it feels kind of like a buy-rideable thing, but I could be wrong about that. But anyway, interesting. I think there's interesting opportunities but you don't have to go crazy when vol is this high. You don't need to have like a massive position to still do okay because vol is so darn big. So, be reasonable. Don't over leverage. Don't get yourself into trouble. And use this as the opportunity is. It's not SPX 3,400. It's 2,400. So, as long as the Republic goes on, hopefully, we go forward. So that's where I am on the whole thing.
Yeah, USO, that's another one. It was shy of $5 not too long. It was back above $5 today, but we've seen, WTI slash down into the low 20s and below. It's just insanity what is going on out there. Whoever would have thought in the middle of a pandemic we'd have a price war in crude as well. And so all these just mad things are unfolding at a record clip out there. But I think that's good advice. Stay small in these markets, stay nimble. And yeah, TVIX. If you're out there slinging TVIX and you haven't listened to our legion of shows we've done over the years extolling the myriad problems with TVIX, and something crazy does happen, don't come to us and say, well, you didn't tell us. We have said that many times. TVIX, not one of our favorite products by a long shot. I mean, look at it. It shut down and had issues years ago, not with completely outside of the market. What was going on in the market? It was an issue with fund flows and TVIX itself. And you're right, TVIX now at $791.34. What an insane run-up it has been. Over the past, March 4th, it was 105. So it's over 7X just from there. And not too long before that, back a month ago, so in February, it was $39.25. So, how the mighty have rallied out here. Maybe not the mighty, the Franken products here have rallied out there. But yeah, be prepared for the other side of this because it will come. And when it comes, it's going to hit TVIX pretty darn hard. Mr. Uncle Mike, sir, same question for you. A lot of things popping off. Commodities moving. You may had to have actually touched your 2-year silver collar. I don't know. But maybe I'm speaking out of school here, sir. What is lighting up your tape out here in these non-Uncle Mike markets, sir?
Well, it's funny on the silver collar. Normally, I would have rolled a call or something along those lines, but implied volatility is so insanely high. With the drop in silver, the puts are going up, but the calls are really not moving, even though the value of silver is getting pummeled. I mean, thank God I'm collared by all means, but I'm looking at this and I literally think of you whenever I look at silver now, Mark. I'm like, well, maybe I'll have something to talk about on the show, but now the volatility on the short calls is so high. I'm like, I can't justify getting out of it right now at these levels.
Are you telling me silver's off about 20% for the week and you still haven't done anything? Is that what you're telling me?
Have you seen the vol on silver? I mean, it's insanity. I'm as shocked as you are. So it's nuts with that. So yeah, there's a lot of opportunities out there. And so it's funny that never before have I ever thought that corporate bond holding would be the biggest thorn in my side as an investment advisor. And so, typically the reason with which you invest in bonds is because you want something a little bit safer and more secure, so to speak. And all my holdings in the like IEF, for example, or the government treasuries have done fine. But LQD has been the biggest thorn in my side throughout this whole ordeal. And I still am holding it. It's a longer term play, so I believe in it. But here's something that I might do by next week, Mark, and I want you to call me on it on Monday if you'd like. You're good at that, aren't you?
I've been known to do that maybe once or twice.
So I'm actually thinking about doing a ratio repair strategy on LQD because of the fact that premium is so high on it that I'm doing a ratio stock repair strategy on a corporate bond fund. That's how crazy these markets are. Now, I might chicken out. I might not do it. I'm not sure. But it's really crazy with where we're at that maybe it's because I'm just in the house so much now, and I'm looking at doing ratio repairs on LQD. That's something I never thought I would ever say my entire life. So we'll see where that goes. In terms of a couple other things that are going on in our triple income portfolio, when this first started a couple months ago, our plan in this, we still believe in all the stocks that we're in. We're still holding them. But I was thinking initially that, we're going to have to just either do call spreads or hold onto the stocks. Because the last thing that I want to do is when stocks go down, sell covered calls on them, and then the stocks go right back up. And then you essentially bought high and sold low. But we actually have gotten assigned on some of our March premium today. And so just in looking at it, I was and I kind of knew this was coming, but I was thinking a couple of weeks ago that we might be doing some call spreads or something along those lines. But we actually have some very, very, very depressed stocks. We still believe in them. Like I said, it's a longer term play, but we're able to sell covered calls for April at the same strikes we got in at March for the short puts. And here's the kicker. We're actually getting more premium now than we got in March when we got into them, and a couple of them. So that's something that I think it's a really crazy time to where if you are a wheel stock trader, the benefit of this 80 VIX life that we live right now is that you're able to do things like still have potential upside and still live your life as a covered call trader and not have to worry about volatility is the same. So you may have to do a call spread. You don't have to worry about any of that. You can, if you still want to hold the stock and want to have premium at the same strike, at least in our experience with the stocks that we're in, you can do that. Now, the next thing that I want to bring up or talk about is that I've had a lot of clients contact me about, hey, what can we buy right now? What are some things with which we can do? What are ways with which we can take advantage of this downturn? And so what I'm looking to do is I think if you want to buy something, just to kind of illustrate what Andrew was talking about, or I'm sorry, what I think it was Andrew, maybe it was Mark, maybe it was Andrew. They both kind of sound alike, so you never know. But picking a strike price on a stock that you wouldn't mind owning anyway, and then going a little bit lower, and then maybe there consider selling a put. So to give you some perspective, I'm just picking Disney. I don't personally own Disney. I do have some clients that are in it, but I'm just using this as just an example. I'm not recommending it. Some people it's good, some people it's not. But to give you an idea of it, Disney was north of 150 a couple months ago. Right now it's trading in the mid-90s. So you might say, well, can I buy it in the mid-90s? Well, of course you could. But how would you feel about owning Disney at $50 a share? That's literally a third of its value a couple months ago. And this is Disney, the same company that owns ABC, ESPN, Disney Plus. I'd be lying if I said that my daughter hasn't watched Frozen the last couple days, once or twice. Or Frozen 2, I'm sorry, that's out now. How would you like to own it at 50? Well, if you go out 1 month to the April expiration, you can sell a 50 put on Disney for $1. So let's think about that for a second. That's roughly a 2% rate of return over the course of 1 month. And the worst thing that's going to happen to you is you're going to own Disney for almost 50 cents on the dollar right now, and roughly a third of its value from a month ago. So that's something to just think about. And Disney's just one example. There's plenty of them out there that are like that, to where if you're willing to own the stock, then it's something to where there's a lot of opportunities like that. Now, the final thing that I'd like to reference, in the spirit of selling puts and not just buying stock, is it time to get in right now? Is the fog cleared? Is now the time to buy? What I'm referencing right now is there's a scene in the movie Trading Places with Dan Aykroyd and Eddie Murphy when they're in the trading pit about to trade all their frozen orange juice contracts. And then Eddie Murphy looks at Dan Aykroyd and says, now? Dan Aykroyd looks right back at him and says, not yet. And they wait. They're a little bit more patient before they get into it. If you really want to get into this market, I'm telling my clients in a lot of cases, not yet, unless you're willing to feel a little bit of pain. But if you still feel like, I don't know, not yet, doing something like selling a put far below where you're at in the current marketplace might be something to consider. Because at an 80 VIX, that allows you the opportunity to sell insanely out-of-the-money puts to where if you're willing to own the stock at that price, it can be beneficial to you. So that's what's lighting up my tape at this point in time, and that is where I'm looking at.
Trading Places, yes. Great film. One of the few great real floor trading films, and given the way the markets are moving right now, I don't think we're going to be seeing many more of them. Unless we go back in time and make some period pieces now at this point. By the way, if you ever watch Trading Places again, check out that scene that Uncle Mike's talking about there, where they're selling all of their FCOJ there, and Eddie Murphy and Dan Aykroyd are in the pits, because it is clear. And he has said, actually, I think on the commentary from the movie and stuff, Eddie Murphy, he had no idea what he was doing. And so watch him out there in that pit pretending to sell contracts and take orders. It it is, if you've ever been on the trading floor, it'll bring a smile or two to your face, which we all could probably use right about now. Let's see what the market is up to right about now in terms of overall options. What is trading, what the volume is like. By the way, OCC coming out with numbers for yesterday. OCC saying yesterday was about 35.1 million contracts cleared, volume 22.5% higher than there so far. That's the year-to-date ADV so far. So this is already an active year, so the ADV is already sky high. We're at about 28.7 million for the ADV and putting up 35.1 million yesterday. So yesterday, blowing the doors off yet again. Also, putting the lie out there that we can't put up numbers in an all-electronic marketplace. Clearly, that is not an impediment out there. Let's just pull up our old friend SPX right now, because SPX is kind of the go-to bellwether for when you think of a floor-traded, pit-traded product in the equity options world. SPX is the one you're going to think about. So let's look at yesterday's volume here. Again, let's do this courtesy of the Flowmasters platform. He was on earlier this week, a good one to use, pulling the date on that one over there on Trade Alert. 2.5 million contracts, 2.51 going up in the S yesterday. That is completely electronic. The ADV, in case you're wondering out there, about 2.25 million. So north of the ADV, reporters have been hitting us up here, asking us what's going on. Is the liquidity good with all these electronic markets? And I've been as surprised as anybody else, but yes, it's pretty robust. You're going to get these weird aberrant quotes and weird trades. I know the Meatball was on here earlier this week saying he's been able to leg into some verticals and things like SPY for even money and stuff. You're going to get those, and if you see them, take advantage of them. But in general, the numbers are not lying. They're putting up size electronically, even in the S, which a lot of people thought really wasn't going to be viable. Let's go out there today and see what's going on out there today. Again, we've seen this dance a little bit before, so the numbers not blowing the doors off, at least not yet. The VIX at about 370,000 contracts as of a few minutes ago. The ADV is about 1.35 million out there. SPY at just a tick under 4 million contracts. The ADV now, get ready for this. The ADV in SPY, 6.25 million contracts. That also shows a lot of the S and just S&P 500 in general flow on the option side is moving over to SPY. Maybe some people initially were concerned about the S. They were worried they didn't want to trade a single listed, single point of failure type product, so they moved on out to SPY. Either way, SPY is just lighting it up. 6.25 million is the ADV out there right now. The S at about 1.1 million right now. The ADV, like I said, about 2.25 million. The Q's kind of the laggard of the bunch, about 470,000 contracts. The ADV about 1.2 million out there. And the Russell, at least the IWM flavor of it, at about 360,000. The ADV, 641,000. This is one of the rare weeks where Russell 2000 small caps are not leading the market to the downside here. We'll get to more of that in a little bit on TWIFO. Let's go on out now to what's lighting it up in the single names. It's a pretty robust day from a single name perspective. Cost you about $1.68 to break into the top 10 today. That gets you to Disney, Uncle Mike's favorite name out there. And I'm with you. I've been looking at Disney there for a while, waiting for it to retrace below that mythical, magical triple-digit level, and it did not too long ago, way shy of that now. So interesting to see that. And yeah, $1 for the 50 puts out there. That's impressive. And also shows you where we are right now in this environment where the parks are closed and all these other things going on. And, of course, Disney Plus may be saving them right now because people are streaming a lot out there. Disney, 168,000 contracts on the tape for number 10. Number 9, AMD falling down to number 9. Still at about 200,000 even out there. Number 8, Microsoft persists in the top 10 these days. 238,000. Who out there, if you're trading Microsoft, just let us know. I'm curious. Someone clearly is slinging a lot of size Microsoft and has been for some time. And yet not a name that immediately leaps to mind in the pandemic. Number 7, good old Gilead, popping back up there again. 244,000 contracts out there. Number 3, Bank of America. 255,000 contracts. Number 5, Snap. 270,000. Number 4, as I mentioned, Ford. Ford rapidly becoming, the stock itself becoming an option. In fact, it's at around on $4 now. If the vice were over here, he would say it is an option. He doesn't trade anything under $5, let alone 10. So yeah, Ford, 274,000 contracts on the tape out there. Number 3, Tesla, the non-union shop. Every other automaker having to shut down production because of union. Tesla saying, no way, Jose. But that stock also well off their highs out there of late. Let's see where good old Tesla is right now. There we go. Of course, my machine does not want to play ball with me right when I ask it to. There we go. 418. So back over the 400 level right now. Up I just love these handles. 57 handles out there right now, or about 15.8%. So it was well shy of the 400 level, and then but back up again. Of course, remember, listeners, it was threatening 1,000 to the upside not too long ago, 917. So it's been cut more than in half by all this turmoil out there. Number 2, Uber, 393,000. Of course, interesting times for them. Not a lot of ride sharing going on, so looking to find other ways to augment what they do, food delivery, things like that. 393,000 on the tape for them. Number 1 with a bullet yet again today, the fruit company, 490,000 contracts out there. So a lot of you folks slinging yourselves some Apple out there. There are earnings numbers for the reports and things for the final names out there. I won't bore you with those. I don't think a lot of people are paying attention to earnings this week. We're waiting for the season to start over and for this coronavirus, easy for me to say, madness to subside. Speaking of coronavirus madness, a lot of you guys have this on the brain, so we're going to, again, suspend with our usual format, head right on into a little bit of your questions. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, let's get to it. A lot of you guys have a lot of interesting things on the brain. Let's kick it off here. I was talking, of course, earlier in the show about how we're in this rarefied market. It's never happened before where we have this entire electronic options marketplace. And you might say, so what? But clearly the numbers out there are interesting to merit. We actually asked you guys earlier this week, this poll is now closed, but we asked you, CBOE and CME both closing their trading floors. Now we could add, if we had waited a few days, we could add, all the NYSE and Philly ones out there as well. So we asked, do you think they'll ever reopen? Yes. Our audience is actually pretty optimistic. 56.5% saying yes, both will reopen. About a little bit shy of 2% saying only CME will reopen. I think that's obviously the dark horse in that race. Only CBOE will reopen, saying 9.3% choosing that. And 32.4% of you saying no, open outcry is dead. With these numbers they're putting up out there, that number might be a little higher, the no category out there. But a lot of you had thoughts on this issue. Let's start off with AJB_2010. He said, I wonder if going forward, if the exchanges will use this moment to replace humans. Well, that's obviously the million-dollar question. Is this going to be the inflection point upon which we see exchanges saying, you know what, we function pretty well. Even products like the SPX and Eurodollars are usually historically associated with the floor, are doing pretty well. We don't need to turn those machines back on, like they say in trading places. So that is indeed the million-dollar question. We're all kind of wondering that ourselves. Natural Ease chiming in saying, a lot of you had a similar question like this. So I kind of lumped a bunch of them together. He wants to know, he means market makers, do they make any difference? Rob Morris also asking, ignorant question, but are they really needed on the floor? What is the benefit to their presence? So a lot of people asking similar stuff to that. Let's see, there's more here, but I'll just read a couple more, then I'll get everyone else's thoughts on this. A lot of you had chimed on this. The Pit Chicago chiming in, because we were going back and forth about whether the box trading floor should be included in this, or if we are really fully electronic and boxes trading. And they were challenging if it even existed. They said, have you ever seen a photo of the box quote unquote floor? We haven't. And no, actually, personally, I have not seen it. I have spoken to people who have been on it, so I do know it exists. And I have spoken to the folks at Box. It does exist, but I have never personally witnessed it myself. No. I have asked to go down there. I keep saying it's not ready. So take that for what you will. Scott Sommer chimes in a lot. He wants to know, did the SF, San Fran options trading go all electronic? That's the PCOAST, and yes, that is part of the NYSE ARCA family there, and they just shut that down starting, I believe, today. 2-year flipper chiming in saying, the last intel I heard is the plan is to reopen the exchanges and the trading floors at the beginning of May. Well, if that's the case, I have not heard that 2-year flipper. Albert Marquez chiming in says, I've heard 4 weeks and I've heard 8 weeks. As for reopening, I have to believe it will be an uphill battle. So 4 weeks or 8 weeks or an uphill battle from him. And this guy, Hoakua, chiming in, he says he actually believes they're going to reopen on the 23rd. So just 4 days. I don't think that's happening, Hoakua. But Mr. Rock Lobster, let's start with this. A lot of people chiming in with the same question. do we need market makers? What the hell are they? Are they really needed on the floor? Rob Morris asking, what is the benefit to their presence? Mr. Rock Lobster, as a fellow former degenerate market maker, what do you have to say to these folks out here who are questioning the validity of our existence, sir?
Well, the first off, what the hell do they know? They're a bunch of people, never been on a floor before, don't know what it's like. Like, what do you need them for? And I think the reason is it's tough to get a quote from a machine. And I think part of having the trading floors around or some live people is everybody upstairs, the floors have it's a central gathering place still, and it has a value as far as, quoting stuff, quoting spreads, quoting things that request for quote or something might have a harder time doing, or, where, I know the systems are so much better than when I was there 10 years ago. But I think that's what having people on the floor can do, getting things done, getting multi-leg things done and stuff like that maybe you don't want that electronic order flow to sit out there for an institution. So I think that's the purpose. Also, just finding the other side of stuff. A lot of larger institutions, they want, that people connect. Floor brokers, traders, the floor brokers, really, it's the floor brokers. It's not so even much the market makers. It's the floor brokers that are down there that can call, and they have customers that have positions and stuff. And they just, old fashioned way, they call around and they see who is interested and they put it out on their, to their client book. So there is still information value. But the electronic marketplace, is pretty good. The systems have become great, much better than they were when I was electronic market making. I'm getting pretty decent fills. I have really no complaints, considering that VIX is 80 and that, the end of Western civilization was there. I thought the fill quality was pretty decent, so I'm not complaining, and I also know what to expect. I'm not trying to jam 1,000 options through the offer, which would have probably been a little tougher to do. But I have a feeling that liquidity would have happened as well. So you're not seeing a lot of posted liquidity. But as far as market makers, I think that information flow, people off the floor like to have information flow and, just live bodies telling them what's going on.
Yeah, that's always been the rub with the S, right? People prefer that in-person, that high touch, as they call it, execution, particularly for the SPX. That's most of the customers like that, particularly for these complex multi-leg trades. Just think of the logistics listeners. It's hard to enter in a 3-legged, or 6-legged, iron condor swap. And you see a lot of that weird, crazy stuff getting quoted out there in the S. Just typing all that in and using the drop downs and selecting buy to open, sell, all these things takes a lot longer on a screen than it does pick up the phone and say, hey, quote me this versus this tied to these levels, go. That's just logistically, it's still a much easier prospect out there in the S, and that's where still a lot of these weird, funky spreads tend to live. Let's go on to today. We've got, let's see. We actually have a poll active right now. A lot of you guys are chiming in on this. We asked you, hey, markets are melting down. Volatility is skyrocketing. Some folks trying to ride that market down, others starting to nibble at some long positions, take advantage of the sell-off, while still others are stampeding for the exits. Which camp are you in? And a lot of you guys are chiming in. This will be live for a little bit longer. If you haven't voted yet, get on over at Options is the place to go on the old Twitter machine. Short and riding it down as of the beginning of Showtime. This may have changed since then, but as of the beginning of the Showtime, it was 26.2%. 52.3% of you are saying, so over half, saying you're starting to nibble here at long positions, which makes some sense, particularly when you see things like Ford at $4, USO threatening to the downside. These are things that the relative risk is fairly small. 16.9% of you saying you're sitting in cash till it blows over. I can't argue with you if that's where you're heading out there. And 4.6% of you saying other. I'll have to look and see what your others are. But a lot of you out there chiming in. We got our buddy Bill Ulivari from Seneca Capital chiming in, saying he has a PSA for options traders. He says equity options stop trading on Friday, but technically don't expire until Saturday, meaning if the market closes early this week, which is a possibility. A lot of you guys have questions about halts and things like that. He says, an incredibly limit-up news occurs, you can still get assigned on a, quote, worthless out-of-the-money call and come in short stock. If you trade call or put options, consider buy to close on your shorts if it's not too expensive. So just a little bit of a PSA out there from our buddy Bill, who also is an old-school options market maker out there. Is there some scrub out there called the Rock Lobster, Mr. GIOVINAZZI? I don't know who this guy is. He's chiming in saying, the Flow Master said gnarly and I missed it. Yes, you did miss it, Mr. Rock Lobster. It was glorious. Monday's show was great and you missed it, sir. I tease you. I mock you.
I did miss. I like Henry a lot. I think he has a great product. And I think probably if it ever really caught on with the retail, I know it's a higher end product, but as far as looking for flow and seeing what people are buying, it's a great product. So anyway, I like Henry. I like his product, and there you go. But of course, he's got that kind of New Yorker-y, like gnarly. I can't even imagine him saying gnarly. Like, how does a New Yorker say gnarly? I don't understand that. How's that happen?
You got to tune into Monday's show to find out. He's a surfer in Manhattan there. You don't see many of those. Let's see. A lot of you sharing sentiments that Rob Morris has here. Rob Morris saying, wow, just looked you guys up. This podcast series looks fantastic. Well, thank you, Rob. A lot of you sharing similar sentiments. We've been around for a long time. We have a great audience, but, times like these, new people are always flocking to the network and flocking to the cause here. It's great to see you. Welcome to the network. My name is Mark. I'll be your host. But, a lot of you guys are discovering the network these days, so keep it up. We love to see you out there. The more, the merrier out there. We share your good thoughts and good feelings, Rob, and everyone else who's been chiming in here. A Small Account Challenge wants to know about sprint puts. He said, I think they look great. What do you think? Well, I think any put these days has performed pretty well, even though they are pretty darn expensive. So be careful of that. We're just talking about selling puts. If you're comfortable with the stock levels, that's one to take a look at. But I haven't looked at Sprint recently. Let's see here. Options Artist saying, he's talking about our episode, The Gamma Gods. He said he liked it, and he wants to take a listen. Thanks, and happy trading. Well, happy trading back to you, Options Artist. Let's see here. Scott Somer chiming in on what we talked about last show. We had a question about, and kind of what Bill was referring to, too, about what happens if the exchanges are halting. What happens to your long options positions, or any options positions, really. And we kind of discussed that on last show. Go check out Monday's episode if you haven't already. We did a kind of big discussion on that. Scott Somer chiming in. He wanted to know, was the answer to that question that you may have to manually exercise them, or will they be auto-exercised at expiration? Well, we kind of touched on this on Monday's show really quickly. I don't know, Uncle Mike, you have anything else to add on the whole what happens to your options after the exchange is halted for Mr. Scott here, who's a regular listener? And also, you have anything to add on what Bill was saying earlier about maybe it might behoove you to close out some of these, what you think may be worthless options in case we do get halted, and then these worthless things all of a sudden have some value. Any thoughts on that, Uncle Mike?
Yeah, close them. You don't know where you're at with certain things and when exercise is going to take place. And so I'm definitely a fan of closing out options if you can before expiration, especially the short ones. The long ones, if all of a sudden you have a call that's way out of the money and you're concerned that it's going to go long, it's going to automatically be exercised, and then you own all the stock, and then the stock goes down on you. You can always call your broker and say, do not exercise if it's a long option and you're concerned with something like that. But if it's a short option, there's really no reason to be in it unless you want to take ownership of the underlying. So if it's a nickel or something along those lines, get out.
Well said, sir. Yeah, those nickels can come back to cost you many dollars. Here, I'm just looking here. We got a bunch of what's a good fun one here to close us out on. Some people have maybe let's take a break from the corona driven stuff for 2 seconds. People have other questions on their brain. Hard to believe, but they do. Dr. Nick wants to know, what are your thoughts on the Schwab TD's merge? Easy for me to say. The Schwab TD merger's impact on the options market. What about free commissions? Thanks for all that you guys do. You're the good guys. Let's go around the horn. I've talked about this a little bit on the network already. Mr. Rock Lobster, what are your thoughts here on this emerging leviathan in the brokerage space that is Schwab /OX/TD/Thinkorswim/Scottrade, all pretty much becoming one, sir.
So is there will there be any competition left?
Well, there's E-Trade and Morgan Stanley left. IB still hanging out there. There's a few others. Ally, our folks, friends over there on that Trade Station. There are other players out there. Fidelity, you may have remembered them. They do play in the option space. No one's bought them yet.
So I think one of the most popular, at least for trade analysis, is the TOSAW platform. If Schwab was smart, they would just migrate to it. And it would make, I think it would add a lot of value to the, and when I remember I talked to at one point, an executive VP at Schwab is like, most of our customers, they only buy a couple hundred shares of stock a year. And that was 10 years ago. So clearly they're going after a different type of customer at this point. So I think if that is a superior platform for them, to be honest. A lot of people like it. So, I don't know if really Schwab are you going to lose anything by the combination? I think Schwab has pretty good customer service. So I'm just not sure. I'm kind of ambivalent about it. I would say if Schwab did get rid of the TD platform, that would be totally asinine of them to do that. It's probably one of the most popular platforms out there. So the only thing I would say is that would be a bad choice. It's much better than the Street Edge Pro or whatever the heck they got, which is kind of a mishmash of stuff. So much better platform for sure.
Yeah, it's clear by going after TD, they're going after a more transactional type audience, a more active type audience than their traditional, shall we say, more staid money management IRA or advisor type audience out there. So if they're going after that, it'd be silly, you're right, to get rid of the platform a lot of them like to use. But I don't know, Uncle Mike, any thoughts on this growing leviathan in the brokerage space and the impact it may have on options traders? Oh, he also has a second corollary. What about free commissions? So anything you want to add on those, sir?
Yeah, from the stock side of it, I definitely like the free commissions, and that if a client wants to buy 8 shares of something, they can. I remember the first day they came out, I had a client call me and say, I bought this stock and I sold it the same day, 1 share of it, just because I can. And so I'm like, all right, very good. Enjoy that. So, it's definitely, I think, a good thing for the retail investor on the stock side of it. On the option side of it, I'm not sure I see it happening anytime soon. But it could happen. You never know. The thing with stocks is that if you're doing hundreds of shares, typically when you buy stocks, or a lot of times a lot of the clients just depends on the size of your account. There are a lot of other ways with which to make money. On the option side of it, there are ways of making money, but there's not as many contracts involved. So it's kind of difficult along those lines. So I'm not sure if that's going to happen anytime soon with free commissions for options. In terms of the big merger with Schwab swallowing everybody up, like you said, we do still have competition out there. So I think that'll be a good thing. But it'll be interesting to see how much Schwab actually embraces options, because when they bought Options Express a few years ago, I'm not sure if they really kept the options a huge priority like they said they were going to, but we'll see what they do when they gobble up TD Ameritrade. So I might be sending trades through Schwab at some point again. Who knows?
Yeah, I'm with you on that. You had a front row seat, obviously, for that OX takeover by Schwab, and you're right. They didn't exactly put all their eggs into the options basket. Took them forever to migrate the platforms and everything else, and I think we've seen the results of that. So hopefully they take a more options-forward, options-facing approach. If they're picking up TD, you got to imagine they want in on that transactional, more active, bleeding edge of the retail spectrum game. And if they do, then they got to have a platform and everything else that can suit it. So hopefully, if it does go through, and there might still be some questions. Maybe the government focusing on other things, maybe delay that approval. I know there were some regulatory questions around it as well. But if it does happen, we'll see. I'm more of a fan at the end of the day of having more players rather than fewer. I think it's better for everybody. But c'est la vie. We'll keep an eye on this one. But yeah, there are still some, definitely Dr. Nick, I think we all share some of your lingering questions out there. As we head on into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Another minute, another bit of breaking news, it seems like. So what we're watching changes second by second, minute by minute. More breaking news. Now they're saying the death toll in Italy has surpassed that in China from the coronavirus, and yet the market's rallying hard off that news. Maybe also rallying off of the equity stakes. I don't know. Something rallying us again. We're back up to about 2% on the S&P and Dow and about nearly 4% on the NASDAQ. So something giving us a bit of a lift. So a lot to watch. Most of it starts with a C, ends in virus out there. Mr. Rock Lobster, we'll start with you. What are you watching here for the rest of this week into the weekend, sir?
Well, what am I watching for the rest of the weekend? There's been rumor. So this is total rumor. I have no idea. If there is a combination of therapies that, affect the coronavirus, tamp it down somewhat. So I think Coloquin, something pronounced along those lines. Don't know if that's true or not. More reputable sources have come out. Guys that are hedge fund guys or like Musk or Elon Musk that are like, hey, look, these guys looking around for, and so that could be interesting for generic drug makers. Could be. And I think the U.S. market, they want to see people being tested easily in the U.S. They want to see some sort of action. They want to see the CDC look less bureaucratic. So I think as far as a market positive, the fact that, everybody's got to not waste our time, but you're taking 2 weeks in, you want something at the end. I think people want to see okay, what does this look like? And I think if they see more activity by the government that looks a little less ham-fisted, people will gain confidence. And I think the credit markets will start to right themselves a little bit. And the thought of people just kind of going back to work eventually, and right now it was kind of way out there in the future. The fact that it could be, a reasonable time, like everybody just took a 2-week or 3-week vacation, and, it's just that's the way life is. I think those would be positive things. I can't confirm any of that yet because I have clients all over the country. They're trying to have people tested, not great still. So they're still waiting, and they're waiting in stupid places, and they don't quite have their act together in that game yet. So if that improves quickly, which I hope it does, I think that will be better for the market and just better for the world in general. So that's all I'm looking at to see what the minute by minute situation changing.
It is quite fluid, Mr. Uncle Mike. Same question for you, sir. What are you watching for the rest of this week into the weekend, sir?
I mean, just the news. What else can you watch at this point? I mean, I'm continuing to watch for opportunities like the one I mentioned in Disney. I'm not in that one, so please don't take that as a recommendation, but or that put anyway. But continuing to just watch for opportunities like that. Still overall of the not yet Dan Aykroyd camp at this point. But if you really got to get into something and you want to get into something, and you're a not yet type of person, then maybe do those puts if you want to get something going in this marketplace.
All right. And we have to get going, at least for now. If you need a little more, and I don't blame you, everybody needs a little more these days, then come on in, check out. And these days, come on in, check us out. Sorry, we got people barging into my studio here. But before we go, let's go back around the horn really quickly. Let's start with Uncle Mike, sir. What's cooking for you as folks want to reach out to you over there in the land of St. Charles? Where should they go? What should they do?
stcharleswealth.com. Go to my website, learn all about me, give me a call. My information is on there. I'd be more than happy to talk to anybody. If you're in a spot where you're like, do I get out now? Do I stay in? What can I do? Options may be the answer for you. Who knows? Give me a call.
All right, stcharleswealth.com is the place to go. Mr. Rock Lobster, same question for you as we all turn into mini rock lobsters. Maybe they want someone to walk them through it, explain what it's like living in a compound and homeschooling. Or where should they go? What should they do?
COMMODITiespit.com. Mark launched the new Ball Edge product, which I have to say is pretty timely, and he's done a very good job. Excellent job, by the way. My Vol Trading Club, which is kicking ass this year, but I'm not going to toot my horn. But, that strategy likes long vol, so it's having a pretty decent year. You want to learn about trading options, if you want to learn how to price and really get a real understanding, come to Option Pit, and we'll teach you how they work.
There you go. Come to Option Pit. They'll teach you how these options and indeed this volatility things works. OptionPit.com. On behalf of the Rock Lobster and Uncle Mike and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for all the other fun stuff that you do. Keep them coming. Keep those questions coming. We'll see you back here in exactly about 30 minutes or so with my buddy Sean and I think Dr. Vix and a few others out there to talk all things futures options. So stay tuned for that. Should be fun on TWIFO. Otherwise, we'll see you back here tomorrow, 1 p.m. Central, 2 p.m. Eastern, as we talk you off the Vol Edge on volatility views and a whole lot more. We'll kick it all up again on Monday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.